Let's get some more analysis on all of this, on the Fed's decision to pause rates and all of this discussion around it we've been talking about. Victoria Fernandez is with us now, Crossmark Global Investments Chief Market Strategist. Oh my gosh, Victoria, we're wearing the same color. First of all, great to see you, or at least a similar color. So what did you make of the press conference here? Do you think that this was a clear communication from the Fed chief? And if you do, what's the message he's trying to send?
Yeah, I don't think it was that clear, Julie. Otherwise, we would have a really good answer to that question. And I think the anticipation was that we would have a pause or a skip, whatever word you want to use here. And then the July meeting, the futures would show for the July meeting probabilities going higher for a 25 basis point hike there. That's what the market anticipated. That's what we've seen priced into the market. So I didn't anticipate that the Fed would come out and do something different because they don't want to cause that extra volatility in the markets. However, at the press conference, I don't think we got a very clear answer as to what the goal was going forward. When asked why not just hike at this meeting, I mean, if I was on the Fed, I probably would have been someone that dissented and said, yes, let's go ahead and hike now. If we see that we are nowhere near our goal, if we see that things like rents, which he spoke about rent specifically. Remember, Julie, housing prices are moving higher. Housing prices lead rents. So it stands that rents should move higher. Inflation could go higher on the CPI number. If those are the cases that you're seeing and things are sticky, why not go ahead and make that jump now and then allow things to work through? I think they're going to take the 2018 vibe where they skip a meeting, they hike every other meeting. I think that's one of the ways as he talks about gradually getting to the end game. That's what they'll do. But there's not a clear story at this point, and I think they intentionally do that. So depending on the next round of inflation data that we get retail sales tomorrow, some of this other data that comes through, if it starts to change a little bit, they can adjust accordingly.
Yeah, Victoria, Julie and I were talking about this as we were listening in on the press conference. I mean, do you get the sense that in this press conference, the Fed chair essentially sort of walked back a potential July hike? I mean, he sort of suggested that there would need to be a lot more data. He talked about a full quarter of data. I mean, I'm looking at between now and the end of July when that next meeting is going to happen. I mean, a lot can happen in the next few weeks, but it certainly felt like he was sort of walking back that possibility in this press conference.
Yeah, I don't think he wanted to commit to that at all, right? So he was pulling back the idea of it's already baked in that we do that. But Akiko, look at the dot plot. It's telling us the median dot now is 5.6. So he can walk it back a little bit for the next meeting so that he doesn't have to be put in a box as to what they're going to do at the end of July. But it seems like the committee as a whole is telling us, look, we've got 2 more rate hikes to go to get to that median dot. And so the words don't really match the dots. And I know they always say these are just projections, don't put a lot of weight into it, but people do. And you guys made a Chuck Norris reference a moment ago. And I think the difference is, look, you look at Walker, Texas Ranger, and he had a lot of credibility in what he said he was going to do. I think here at the Fed, people may rely a little bit more on the dot plots with the credibility than on what Powell is saying. I think it's why we initially saw yields move up a little bit. They came back down a couple basis points, but I think we're still higher than where we were at the beginning of the day and why we've seen so much volatility in the equity market. So maybe a potential pullback there, but the dot plots are telling a different story.
All right. So, Victoria, put it all together for us. What do you do strategically with equities right now? And does what happened today change anything for you?
It doesn't change our outlook at Crossmark. And I think that's because the way we've been approaching this market is that we actually thought that the Fed might do more rate hikes, right? We look at what we're seeing in the marketplace and we're not seeing inflation come down far enough. Now, if the Fed had come out, Julie, and said, we're going to move our target to 2.5% or 3%, then that's a different story. Then maybe we get a little more bullish in the market and we do a little more high beta stocks. But right now, we're really trying to have some diversification. You have to have exposure to some of those high beta names. But we also think it's really important because we do anticipate having a pretty good pullback at the end of this year, mild recession, whatever we want to call it, that you need to have some of those other names, some more staple names in your portfolio to mitigate that. So really doing a balanced portfolio with our clients. We're also being data dependent. That could change, but for now, that's our approach, and we think it will bode well as we go through the end of this year.
We're all just data dependent in this world. Victoria Fernandez of Crossmark, thank you so much. Good to see you.
My pleasure.